Tuesday, August 17th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how massive increases in shipping costs are impacting or continuing to impact the global supply chain. And I think it could lead to a stagflationary environment. Not that we're not seeing that already, but I think it could get even worse, even though the crisis, the health crisis that started last year is improving. It's left a lot of new processes and overreaction from bureaucrats that's leading to this. We're going to look at an article in the FT about this. We're going to look at an article on Zero Hedge about this as well. Before I go into this, just a comment or two about President Biden's announcement yesterday, or short speech. I saw a headline earlier yesterday before he gave his speech that he was going to start his speech at 8:45 p.m. London, which is 4:45 p.m. Eastern time. And I thought that's strange. I thought he'd wait until the stock market closed. And lo and behold, he did start at 4:02 Eastern time. And the stock market rallied about 100 points or more in the last half hour or so. So I think they realized we need to goose up the stock market before he starts speaking. But apart from that, one thing I noticed in his speech, and I can see how he convinced a lot of people, or maybe not, that he did the right thing. But I'm not here to judge what he did. I think it's a mess over there, of course. But one thing he said that I thought was a little bit economical with the truth is that the United States was not in Afghanistan to do any nation building. So my first question is, so if you weren't there to do any nation building or state building, why were you there for 20 years? Why did you install a president and his name is Ashraf Ghani? Why did you install a guy that was basically brought up in the globalist environment? I mean, I was going through his Wikipedia, this president of Afghanistan, or ex-president, yesterday or the day before, because I wanted to know a little more about him. And this is what it says about his academic career. Following his bachelor's degree, Ghani served on the faculty of Kabul University 73 to 77 and Aarhus University in Denmark 77. Following his PhD degree, he was invited to teach at the University of California, Berkeley in 1983, and then at Johns Hopkins University from 83 to 91. He has also attended the Harvard, INSEAD, and World Bank, Stanford Graduate School of Business's Leadership Training Program. His academic research on state building and social transformation. In 1985, he completed a year of field work researching Pakistani Madras as a Fulbright scholar. And he gave up his American citizenship to become a politician, again in Afghanistan. He worked for the World Bank. He was apparently considered to become Secretary General of the United Nations. So here we have President Biden now changing history, saying, oh, we weren't there to do any nation or state building, even though the guy they put in there completely failed, and he was trained to do state building and social transformation, as it says here, his academic background. And He had a PhD as well, this guy, or has a PhD. So it just goes to show, I think the globalists picked the wrong guy and made a huge blunder, especially in the last few days. So now back to economics, the global supply chain, and why I think prices are going to keep rising. It's going to get even worse. And is it just the global supply chain, all the bottlenecks? Yes, they're going to impact the supply, but they're not impacting the supply of money that's going to keep flowing, money and credit that's continuing to flow into the system through fiscal and monetary policy. But yes, I think unfortunately the economy or the world economies, the major economies are going to continue to suffer from higher consumer prices. And it's not just in the US that you buy something, you look at it, and it's made in China. So this is highly significant. So FT says shipping bottlenecks set to prolong supply chain turmoil. Tenfold jump in costs since start of pandemic squeezes importers and exporters. So let's have a read of this article from the FT. It was written yesterday by Harry Dempsey and Chris Giles in London and Primrose Reardon in Hong Kong. So it says the closure of a terminal at the world's third busiest container port is only the latest sign that turmoil in ocean shipping could run into next year, posing a threat to global economic growth as chronic delay and soaring transport costs may leave demand unmet and push up consumer prices. Yeah, I guess it's also a perfect excuse for the Fed to continue its loose monetary policy. They said, I think yesterday, that they would consider tapering if the economy improved, but I think this is not going to lead to an improvement in the economy. A coronavirus outbreak led to a partial shutdown at Ningbo Shushan port last week, and the resulting suspension of inbound and outbound container ships reduced the port's capacity by a fifth. But as I said before, bureaucrats and people in charge of things like ports and other things are overreacting because of outbreaks, small outbreaks of cases. You just have to look at Australia, what they're doing there, and I feel really sorry for my Australian viewers. It follows another Chinese outbreak in May, which led to a 3-week-long closure of the Yanshan terminal in Shenzhen and created knock-on effects in international shipping. A relentless surge in shipping prices and persistent bottlenecks at ports around the world have added to the barrage of problems affecting supply chains. These include the semiconductor crunch and the rising price of raw materials, to truck driver shortages as retailers stock up ahead of the peak shopping season. Importers and exporters are fighting to recoup costs caused by a rise in shipping costs, which have soared to about $15,800 to move a 40-foot container from China to the U.S. West Coast, a tenfold jump on pre-pandemic levels and up by half on last month, according to data provider Freightus. So here you go. This is the increase here. I personally think this increase in shipping costs, yes, it is because of the lockdowns when we started last year. Partly that triggered it. All the disruption to shipping and now the ports closing. But I think there's something more to it. It's like they opened a Pandora's box and they can't put things back together right now. And yes, I think it's a lot more serious than that. I think the monetary situation has a lot to do with it as well, because Yeah, they've basically stimulated the system monetarily and fiscally, and they forgot that people need to produce and work to make the economy function. They thought that everyone could be at home taking their stimulus checks or furlough checks like in the UK and ordering things from Amazon, and that everyone else around the world would be doing everything that they need to do as they did prior to this crisis. So I think this is huge. This is not going to end anytime soon. And I think it's going to make the stagflation even worse. It's going to keep the central banks printing. Tapering is just a... It's just propaganda. It's the central banks trying to calm the markets down. I spoke to a friend of mine yesterday. I worked with him in the city. He's still in the city. He's a bond, how can I say, a bond bug. He's been right in the last few months. He thought bonds would rise and yields would drop. And we were talking yesterday, and I asked him, what about the Fed? They're talking about tapering. And he like laughed at me. He said, forget it. They can't do it. And I think that's the way it's going to stay. So we were looking at this. I think it was Southern Prepper. I think I saw a video he made maybe late last week about this port in China partially closing down. It's the biggest port in the world. Yes, it's the third busiest container port, but in terms of port, it's the biggest in the world. It's amazing. I'd never heard of it. It's a little bit like Wuhan last year. I didn't realize that city even existed. And it's a city of 11 million people. Just goes to show how China is such an economic power, I would say. Zero Hedge as well, reporting on the same story here. World's third busiest port, container port, I would say, because it's actually the world's busiest port as a whole, remains partially shut in China, stoking fresh supply chain fears. So they've covered it as well. They're the container shipping rates. So how much longer can wholesalers, retailers keep delaying price increases? Of course, they're already increasing prices. They're already shrinking packages. But yes, things are only going to get worse in terms of currency debasement. And it's not just the dollar that's going to go lower versus real goods. It's every fiat currency. So with that, let's look at where the markets are this morning. It's just before 9 a.m. London time. We've got spot gold at 1792.70. So gold is continuing to rise quite well ever since we had that attack last week and the week before during non-farm. Gold got down to like 1660 in my system here on that Monday morning. Well, it was around 1 in the morning. Some people say it got down to 1675. But anyway, we're now almost at 1800. The high overnight is 1795.50 and the low 1784. We're up just over $5 or 1/3%. Silver got up to almost 24. Yeah, silver is underperforming, and that's not good. We want to see silver outperform like it did last Friday. It did really well. It's kind of slowed down here a little bit. I think what happens is when the bullion banks are in trouble keeping gold down, sometimes they try to keep silver from rising because they know that's a bad signal if gold's going up and silver isn't. So there you go. Right now, silver is up 4 cents at 23.88. As I said, the high was just under 24 and the low's been 23.77. The Dow future was down 150 points. The NASDAQ 100 future is down 56 S&P is down about 19, and probably will be up at the end of the day after the president's working group on financial markets come in. So the FTSE this morning is up a couple of points. It's at 71.50. To the currencies now, we've got sterling under pressure here this morning. Is down 1/3%. Testing 138. It has been as low as 137.87. The euro is unchanged at 117.72. The dollar is up slightly versus the yen at 109.39. Dollar's up about 1/8% versus the Chinese yuan at 648.40. Aussie dollar is down 2/3%, below 73 now versus the dollar. And the dollar is up 1/3% versus the Canadian dollar at 126.17. To the general commodities, WTI crude is down 2/3% at 66.78. High-grade copper is down 2/3 as well at 429. And to finish off, look at the 10-year yield. It's down a couple of basis points at 1.24%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.